Welcome to the M2I Alternative Investments Chat, where we demystify the world of alternative investments and financing for entrepreneurs and investors alike. With these discussions, we hope you're more empowered to unlock new opportunities in your business or portfolio. Welcome back to our two-part series for our non-accredited investors today. We'll be diving in a little bit deeper. I touched on our last episode that we were going to be talking about due diligence. So, Erica, can you please kick us off? What is due diligence?
Due diligence. Well, it's kind of just research. These companies will give you any information. We all know how to use the internet. If you don't, I'm sorry. There's probably a class on the internet to learn how to use the internet. No, but you can research any of these investments online. There's tons and tons and tons and tons of information. And so that's what due diligence is. It's literally thoroughly researching and analyzing the investment opportunities to make an informed decision. Think about when you see somebody's status change on Facebook, then you start scrolling back through their pictures to see when they might have broke up. That's exactly what due diligence is, okay? It is that deep dive trying to find out when they broke up research.
So it's being a stalker.
Pretty much, but for a company that you're going to give money to. Yeah. Exactly. So, but you want to make sure you're understanding your investment. You want to assess the risk, research the company, evaluate your financials to make sure that you can give them money. But that's exactly what due diligence is, just research.
Yeah, and I do want to say, if you are having trouble getting that information and finding those things out, that's probably... that should set off your little spidey tingles.
Yes.
And you should know, this is a little sketch. This is a little weird.
Yes.
If you
a red flag comes flying up.
Exactly. If you are wanting to give your money to somebody and they're being weird and fishy about it, probably should look for a different opportunity.
Yes. Most alternative investments are very happy to provide you with all the information that you ask, either on their website or call them. Call them and ask. If they don't answer or won't give you the information, then I probably would look into something else to invest your money in.
Phone number's disconnected. They say, who's this?
Who's this?
What are you doing? Stop calling me. Probably don't give them your money.
If you do, then that's
like, we're on. Oh, yeah. So evaluating all of those things can help you determine what investment is the right fit for you.
Absolutely. So again, do your research.
Yes, exactly. And also think about why you want to invest. What are your goals? We've talked about this a lot, and I don't think we'll ever stop talking about it. What are your goals? What do you want out of this investment? How long do you want to be without this money? That will help you allocate your funds accordingly and identify whether you want to increase your income or save for retirement. What do you want to do?
Yeah.
Is this just extra money that you want to have just for fun? Is this something that you want to grow into something bigger? Are you trying to save money for future generations? What do you want?
Exactly. If you don't know what you want, I wouldn't suggest investing at the moment, because you want to make sure, like you said, that you understand your long-term goals, so that you can make a very wise decision when investing.
Right.
And that's, part of the investment strategy. For non-accredited investors especially, is you want to make a plan. Make a plan first. For any fund, it's important to consider the rate of return. How much are you getting back? It's not going to do you any good if you give them $5,000 and at the end of the term you've made $5,030. Doesn't make any sense. You can make that leaving it in your regular savings account.
Right.
So you want to make sure that when you are investing, those rate of returns are, good.
Right. What's the trade-off?
Exactly. And then you want to make sure that you're going to set realistic goals. It's sometimes very difficult to think about, but if something was to go sideways and you lost that $5,000, are you going to be okay?
Yeah.
Can you pay your rent? Can you pay your mortgage? Can you pay your bills? If you can't, don't invest.
Yeah, probably not a good idea.
No, be very, very realistic.
Yeah. And that also will help you determine, too, how risky of an investment you want to invest in. We've talked about before how riskier or perceived riskier investments can have a higher rate of return. If you have $10,000 lying around that you could lose it, it won't affect you at all, and you just kind of want to see what you can do with it. How can you double your money? Can you, what can you do with it? Maybe you're more willing to invest in a riskier investment that has a higher rate of return, because to you, $10,000 is nothing, doesn't matter to you. You could lose it all and it doesn't matter. But if you're someone who can't do that or has goals of really growing that money significantly because you want to retire or whatever, you might want to invest in something that's more safe.
Exactly. And we want to remember that, you know, there's a non-correlated assets with these alternatives. So as the stock market is, you know, doing its lovely dance, going up and down, doing the worm, some of these alternative investments, they don't act like that. So that's something that's really great when you're thinking about risk management and diversifying your portfolio is, you know, diversifying doesn't mean you can't ever invest in stocks and bonds and cash. Just know that there is that market that it goes up and down. Look how, I mean, if you follow any of it, Tesla went down how much and then went back up when Elon went to China or whatever. And it's like, I don't understand how this works, but that's what happens.
Yeah.
So when you invest in an alternative, it's a long game.
Yeah, and it's not either or, it's both and. When you're diversifying your portfolio, it is having multiple eggs in multiple baskets. And that if this basket gets lit on fire, you have your other eggs.
Exactly. Well, you have breakfast too for the ones lit on fire, but we'll go there later. But we want to make sure that, you know, again, these alternative investments, it's not a one and done. Like you should have a nice round portfolio with a little bit of everything so that if something does happen and your eggs make breakfast, you've got the options to keep on going. Let's talk about some case studies for non-accredited alternative investments out there, because I know we've touched on them like REITs and stuff, but what if real estate like isn't your jam? Like, okay, cool.
Yeah.
Like, what do you do?
Yeah, well, we kind of touched on this before, but I think a way to make investing more personal and more exciting is to invest in things that really spark your interest or something that you're passionate about. There's something called socially responsible investing, which is SRI, and that offers non-accredited investors the opportunity to invest in companies or projects that align with their values. And this could be environmental sustainability, social impact, and corporate governance practices. So if you are someone that's wanting to make a difference or a change with your money, that's important to you, you can invest in things that correspond with SRI. There's also ESG, and this is investing based on environmental, social governance criteria, which is kind of hand in hand with our SRI. And this allows non-accredited investors to support companies prioritizing sustainability, ethical practices, diversity, social responsibility, and contributing to positive societal outcomes.
That's awesome. I really like that, especially like, you know, if there's something that really speaks to your heart and you want to do it, why not invest? And so you feel good, first of all, about the investment that you're making, and then also you're getting something out of that. The one thing that you mentioned was that environmental, you know, sustainability is like, what about other countries? Like they also need money to build things, and you can always invest in those types of projects and get a rate of return. So you're helping someone get really nice fresh water in a third world country or something like that. So your money is helping people and it's making you money too. So it feels good. I think that's awesome, because I think a lot of people don't understand that there are companies that need money to build these things, and they need investments.
Yeah.
So
yeah, and I think too, when people think about investing, they think about Wall Street. They think about guys in suits, or maybe in Patagonia vests, and they
bash on Pat.
I'm not bashing. I'm just saying that's kind of the idea. And some people, that doesn't get them excited.
Right.
That's not something that they're really wanting to contribute to. So if you can find something that you're passionate about, it can help you get into investing.
I like that a lot, because again, I never would have thought to invest in something like that, because a lot of times we don't think about that those companies also need money and don't have it all and need our assistance in providing those really awesome things. I think we talked really quickly last time about investing in startups and like really cool inventions. You know, your neighbor might have some really cool thing and you want to help them out, maybe get it out to the market. I think, again, something that we don't really think about those startup companies need money.
Yeah.
It's not like this is some billionaire who's like, I'm going to make a product and here it is for the world and I'm going to sell it and make a lot of money. No, these people are you and me. And like something happened, like this morning, I could barely get my zipper up because I'm at my house and, the girl, it's girl problems. But there actually is a device that like hooks on that pulls it up. Somebody had to create that. They probably needed funding to get it going. By the way, I need to buy one. So
I'll
Instagram, send me the link.
Yeah, I'll drop it.
But those things we don't think about. How do these inventions come around? Somebody had to think of it. Somebody had to help fund it. And we can be part of something that's really cool. Help women zip their clothes up.
Yeah, exactly. Or, too, if you have a friend or a neighbor that is trying to get their product or business off the ground, helping them build their business can also be something that you're passionate about. If you're helping your sister and she has been working at a job that she hates, but she has this idea and, you want to contribute to that, you could help potentially change her life. And, personally for me, for those who are close with their siblings, that'd be something I'd be interested in if I thought that the product was good. So,
I won't tell your sister.
Yeah, exactly. But, thinking about how can you get interested in investing? What is something you could be passionate about? That's a great way to kind of start when you haven't invested before.
Exactly. And a lot of this investing for non-accredited investors, this is how you get going. And then next thing you know, you might build up that bank and transfer over to accredited investor. But you got to start somewhere. And I think these are some great ways to get started, especially if you're new to the alternative world and you don't know really where to look. I think that's really fun, things to do. Look at your neighbors, look at your friends, look at your family. And then, we just want to give a little bit of
Parting words,
exactly, for our non-accredited investors. If you're just starting out, educate yourself. Again, I think this is going to be the biggest one. You have to do your research. A lot of these companies put a ton of their information up. I know I subscribe to a newsletter that comes every morning, and one of the little portions is always like a new company investing. They have all of their information up. What regulation they fall under, who can invest, how much the investment is, how long it is. It's out there if you're willing to look for it. And I suggest looking for it because it's a lot of information. And if you have questions, 1, Google it. 2, there's wealth advisors that don't cost a lot of money. Look into maybe getting yourself a wealth advisor so that they can assist you with these investments.
Yeah, absolutely. And you don't even definitely invest or educating yourself about that particular investment is super important, but also just educating yourself about these rules and regulations. If you find an investment and, this is a Regulation D offering, what is Regulation D? You can look on the SEC website and it will outline in very plain language exactly what that is, how it works. So educating yourself not only about the investment and what you're investing in, but how the investment structure works. And learning everything that you can about that.
Exactly. And there's tons of articles, podcasts like this one that are out there to educate you. And, again, some of the information is we get things wrong. We're all human. And I've watched tons of YouTube videos and while learning about alternative investments, and I'm like, wait a second, that doesn't sound right. But again, it's a starting point and it gets you thinking. And like you said, the SEC, their website is in very, very plain English. It is not in like legal jargon, so you can fully understand it. And it gives yourself you're like, oh, okay, I actually know what that means. Oh, I actually know. Okay, now. And then next time you see something that's a Regulation D, you're like, oh, I already know about that.
Yeah, exactly.
I already educated myself.
And you could stay up to date with the news too, as we've mentioned. Sometimes these regulations change and shift. So what has been the rules and regulations in the past may not be the rules and regulations in the future. So educating yourself on those things that are changing can also be a huge benefit to you.
Yeah. And then you want to just make sure that you're assessing your financial goals. Again, if you cannot afford to lose it and be without it, maybe slow down. But also, just because you do an alternative investment doesn't mean you need to put $10,000 for 5 years. Maybe do $10,000 for 1 year. See how it feels, see what the rate of return is, see, every day-to-day changes. You might be like, okay, that was great. I made some money. Awesome. Or you might be like, this was really awesome, and I can't wait to reinvest this money for a longer period of time and get more of a return.
Yeah.
But you have to know, only you know what's in your bank account. And so you have to know and what your bills are and all that good stuff. But like, you have to be the one to assess your financial goals, and be honest with yourself.
And on that note, you can always start small and scale up. I think a lot of people get intimidated by, oh my gosh, in order to invest, I need to have $50,000 extra dollars laying around that I can, invest and I don't have to worry about. That's not necessarily true. You can always start small, and especially while you're getting your foot in the door, it could be a great idea for you to invest a smaller chunk of money for a shorter duration of time, like you mentioned, and see how that feels. You can always continue to build your portfolio over time. You don't necessarily need to go all in all at once.
Yeah. And that just, goes back to staying patient. These long-term endeavors, you have to have some discipline. Think that money's gone. It's hard because I know in what I lovingly call the world of Amazon, where I order it, it's at my door by 2:00. And if it's not, I'm having a panic attack, it's like, but you have to stay patient. This is not Amazon. This isn't next day delivery.
Right.
This is a long-term, goal of yourself, like of yours. Like, you want to get this specific rate of return, it's got to go in for a little bit longer.
Yeah.
And be okay with that, and avoid making impulsive decisions on those short-term markets, because it can really mess up your plan.
Yeah.
Stick to your plan. Stick to your plan. Stick to your plan.
Exactly. And you can always start with the basics too. You can start with something that's lower risk, like an ETF. That's considered the more liquid of the alternative investments that are available to you. So you can start basic, see how that goes, and then keep going. All of these kind of fold into each other. But, you said don't be impulsive. I think that's a great, thing to think about these investments. Just, really think about your goals. And also think about how you want to monitor and rebalance your portfolio. Just because you're in an investment now doesn't mean that you can't shift your portfolio or the percentages that you have allocated to stocks, bonds, and alts. You can always kind of adjust that to align with your goals.
Exactly.
And to put you into a place that you feel more comfortable.
Exactly. And a lot of these, even on these like handheld devices where you can view your investment, you can check every day. Check. There's nothing wrong with checking and making sure that it's going the right direction as you're learning and growing through this process. And like you said, let's say one of them doesn't hit the way you wanted it to. When the time period's done, don't reinvest. Reinvest in something else. So you just want to make sure that there's nothing wrong with checking the balance, checking how it's going. But again, you want to stay informed and stay engaged. Keep yourself up on financial news, how the market's trending. Don't go out and buy GameStop. I know that guy's back out on Twitter. We're not listening to him. Okay. But, follow those market trends and economic developments that may impact your investments. I don't think a lot of people do that. It's like, oh, there's my money. I invested it. And then you're like, do. Yeah. No, pay attention, watch it, stay informed, stay engaged, monitor it, make sure it's doing what you want it to do. Because the market changes.
Yeah.
Every day.
It does change. And if you've invested in something that's more risky and you find that that's really freaking you out and that makes you feel really uncomfortable, it's causing you a lot of stress or anxiety, maybe shift gears. You can, if you're watching the market and every day it's up and down and that makes you nervous, you can invest in something that's more stable and
less
volatile, less risky. And, if that makes you feel better, then do it. And investing is all about you. There are few things in this world that are all about you all the time. And investing your money is one of those things. So this is a time where you get to check in with yourself and decide how you want to spend your money that you've earned.
I love that. And I hope this has helped everybody close some of the gaps on how non-accredited investors can actually invest their money. But just remember, knowledge and due diligence are the key to navigating this exciting landscape. And trust me, it is a landscape I hope you go out on. Thanks for joining us. Stay tuned for more insights in our next episode. And don't forget to subscribe to continue the journey with M2I. See you next time.
The content provided in this podcast is for informational purposes only and should not be construed as professional, financial, or investment advice. This podcast should not be construed as an offer to sell or a solicitation of any offer to buy any securities. We strongly recommend that you seek advice from a qualified professional before making any financial decisions.